Why would you buy those stocks? I don't know, but I think there's something going on. We have a new moving part into the stock market. It's the sports bettors. As you probably know, sports are not happening, so there's a whole community of sports bettors who have nothing to bet on. So they have turned their attention to the stock market. Their tribe is led by a fellow by the name of Dave Portnoy. I believe that's how you pronounce his name. And he's a momentum bettor. This is the way sports work. A team gets momentum, they capitalize on that momentum, and they put greater effort, greater energy towards the momentum. Well, that's what's happening to that segment of the market. Then we have another segment of the market, which is the foreign investors. We know that Saudi Arabia bought 10% of Carnival Cruise Lines. We know there are many sovereign funds who see our market as an opportunity to raise cash, to invest in good companies that are depressed. And in some cases, invest in bad companies that are suppressed and invest in companies that are only staying alive by increasing their debt. The other member that's been there for a long time are the momentum mutual funds. These are mutual fund managers who have just a boatload of money. When I was a financial planner back in the 90s and the early 2000s, I had one of the largest financial planning firms within the Ameriprise, what used to be American Express Financial Systems. Several years I was the largest out of 10,000. And we had a fund called New Dimensions. And at that point, the .com was just happening. And New Dimensions just kept throwing money into the .com stocks. Well, that's what's happening now. We have a lot of mutual fund companies who are receiving money, or ETF companies who are receiving money, and they're chasing the same stocks. And in many cases, it's the stocks that I like, the Apples, the Facebooks, the Amazons, the Googles, and that's why they're reaching new highs. But they also then have a segment of their population who want to get some bargain basement buys. And that's where the fourth element comes in, and that's you and me, the retail traders. And some of us invest based upon the same way we buy our clothes. Some of us, or you, go to Kohl's or Marshall's, and you think you can get a good buy there on a dress or a pair of pants or a suit, as opposed to buying at Saks Fifth Avenue. And that makes sense in clothing and then maybe in house furnishings, but it doesn't make sense in the stock market. And that's what I'm here to tell you, is that if you are bottom feeding on that as a means of making money, and I understand it makes a lot more sense buying a $14 stock, anticipating that you might be able to double it at 28 than it does to buy Amazon at 2,000 and think you're going to double it and it go to 4,000. Well, I personally think you have a better chance at Amazon than you do some of the stocks you're buying down in the cellar. So let's look a little bit more in depth of it. Some of the stocks, I got an email and said, what do you think of Sprint Airlines? And I understand why she liked Sprint Airlines. It was a $47 stock. It's now a $17 stock. And as I said, there's a likelihood it could go to from 17 to 34 and you double your money. But you need to look a little bit deeper and think about, if you've seen those pictures of all the airplanes sitting on the runways, American Airlines, Delta Airlines, United Airlines, Southwest Airlines, all those airplanes sitting on the runways. And Sprint has made its niche a discount airlines. Well, don't you think that American and Delta and United and Alaska and all of them are going to discount their fares. In fact, Southwest just came out a little early in the season with a discount package. They're going to fight for that traffic. And it's questionable whether Sprint will be able to hold up against that fight. So my question is, that's a choice. Why would you make that choice when, and this is a company who is borrowing money in a means to stay afloat until the business picks up? So why would you buy that company at $17.59 a share when you have a company like Facebook who isn't borrowing money? In fact, they're spending money. They've spent billions of dollars to buy 10% of the ownership of, I think it's called Jio, which is India's largest telecommunication company. And they're going to take the skills and the talents that they have honed over the last 18, 20 years in the United States on 350 million people, and they're going to use those same skills to the 4 times the population of 1.3 billion people in India. Now, doesn't that make more sense than Sprint Airlines trying to fight for survival? I just don't understand it. So why would you buy that? And then Carnival Cruise Line. When are they going to get back to sailing? They have been told the earliest they can get back is, I believe, in September. Well, and then in September, do you think they're going to allow Carnival to put 3,000 passengers on a ship that they used to put 3,000 passengers on? I don't think so. I think they'll have the same restrictions that the restaurants do, 50% occupancy, or maybe 25% or 33, whatever it is. It's not going to be able to generate the capital, the income that they have in the past. They say they have $7.6 billion of capital right now to get them through. But if you look a little bit deeper, 2.9 of that 7.6 billion is passengers' early deposits, which they have an obligation to refund if those passengers should ask for them. So they're not in a strong position. And then again, when we get back to sailing, they've got a lot of debt they've got to pay back before they ever think about adding money to their coffers. So those are good choices. American Airlines just announced it is borrowing another $3.5 billion to stay afloat. I think American, we know that some of these airlines are going to collapse, and their airplanes that are sitting on runways will be bought up by the other airlines at pennies on the dollar because there's no use for them from anyone else. I mean, think about it. If you have a lawnmower and you're no longer cutting grass, there's no use for that lawnmower in your neighborhood because nobody uses lawnmowers in your neighborhood anymore. So put it out on your street and ask $300 for it, and nobody's going to buy it. Well, that's what's going to happen to the airplanes. And some of these companies are going to file bankruptcy. I can't believe also I saw today that Hertz stock is up 62%. It sells for something like $2 and it's up 67%. Why? Why would anybody buy that? Because they're in bankruptcy. The last person who gets paid anything when a company comes out of bankruptcy court is the stockholders. So what all you're doing is betting. You're pulling the crank on the slot machine in Las Vegas or Tunica or wherever you go. You're betting that some fool will want to pay more than you paid before you get out. Why would you do that when there are so many good choices? Then I want to talk about Dave and Buster's. I got a comment Carrie, what do you think about Dave and Buster's? Well, I knew why he was asking, because I saw the same video. I saw a video of a talking YouTube head that said that he and his wife had gone to Dave and Buster's the past weekend and had such a fabulous time. They had all kinds of TVs for sports. There are no sports. They had food, not all that good of food. They had adult drinks, and they had games. They had all kinds of games that we could play. We had a wonderful time. And so I decided to put $70,000, not me, this other talking head, into Dave and Buster's. Let's think about that. Dave and Buster's was at that time was selling for $19 a share. That was, he said, on June 9th. He bought it for $19 a share. And Dave and Buster's was, I think, about a $40, $50 stock. So he was buying on the cheap because he had a good time that Saturday night. Well, let's think this through. We're in the middle of a pandemic. We're just opening up. Dave and Buster's has a huge investment in their stores. They're paying rent. They have inventory and food and liquor. They don't rent their games. They buy them. And so now the community is opening up. But the community is saying you can only have maybe 33% or 50% occupancy. Can they make money at 50% occupancy? No. Every restaurant I've seen interviewed on TV says, no, we can't even break even at 50%. But this talking head put $70,000 into it. I went to a restaurant with my 2 grandchildren and my son a week ago last Tuesday. We had a wonderful meal, spent over $300. And we got notice on the following Monday that the restaurant had closed. And the reason the restaurant had closed is they had discovered that one of their staff had the coronavirus. And the state required them to shut down. They had to clean totally their stores, and they had to stay down for a quarantine period, which I believe is 14 days. Now, if I'm Dave and Buster's and I'm subject to that same scrutiny all over the country, I'm not sure how many stores they have, how am I going to make any money if, first of all, I can only have 50% occupancy, and if any of my staff get the virus, I got to close down again? Why would I put $70,000 of my hard-earned money into a jeopardy like that when I can buy Google, when I can buy Facebook? I don't get this, except that it's amateurs playing a professional sport. And the reality is, if you think you can go play professional basketball, professional hockey, professional football, professional tennis against the pros and win, you're delusional. And if you're going and buying things like Dave and Buster's, and I had a lot of respect. In fact, this guy who did this was one of the YouTubers I used to follow, but not anymore. I just don't understand that. There are some good opportunities to buy stocks. Today, I've got a bid in to buy Simon Properties. Now, you might say, yeah, but they're a mall and they're not going to, they're financially sound. They were in jeopardy that they had a big purchase they were going to make, but it looks like they're going to get out of it. The company that was to be purchased is fighting them, but that'll be tied up in court for 10 years, 5 years. So we'll get through that. And it, in fact, might be a purchase they want to make somewhere down the line. So I'm trying to buy Simon Properties. It's a depressed stock. It's got a good balance sheet. It doesn't have to borrow any more money. So I think it will show profits as the economy opens up. If a member of their staff, their cleaning crew, gets the coronavirus, do they have to close down like Dave and Buster's? No, they don't, because that cleaning crew is not in the same realm as a server, a bartender, or a table cleaner. So I'm trying to buy a company that is depressed. And what I'm telling you is there are these opportunities, but they're not in the airlines, the cruise lines, and the food business. So if you want to be a part of what I'm doing on a daily basis, I put out a daily newsletter. And in that newsletter, I give you what I'm doing. You need to go to this website I show over here. It's bestofusinvestors.com. I try to put it out every morning that the market is open and give you some tips and some of the research that I'm doing, because we're a tribe. We're up to about 7,000 people. Our goal is to get to 1 million. Think about the power of the minds coming together. Think about what you just learned, whether you agree with it or disagree with it, about Dave and Buster's and why I don't think that's a good investment. Think about what you've just learned about the airlines. Where else can you get this? And it's not just from me, it's from other people. We have an engineer in Saudi Arabia that we're still waiting for your picks for the drillers over there that will benefit once oil gets up to $40, $50 a barrel, and it's in the 30s now. So join our tribe. Go to educate yourself. I'm very big on education, and there's some books that I think you need to read in the description, and learn what's happening, how we got here, where we're going, and what the future looks like. Okay, don't buy those stocks.